Today's Animal Spirits is brought to you by YCharts. 2025 was a wild year with rate cuts, rotations, policy shifts, and plenty of noise. But advisors know the headlines aren't what matter. It's the data underneath. And if you're trying to help clients make sense of everything that happened, YCharts has you covered.
On December 9th, our very own Josh Brown is teaming up with YCharts CEO Sean Brown, no relation, for a live webinar breaking down the charts that define 2025. They'll walk through the visuals that actually drove investor behavior this year, from sector surprises to sentiment swings, and show how top advisors are turning those moments into clearer, more confident client conversations. You'll also get the full charts that define 2025 deck packed with visuals. You can plug directly into year-end reviews, proposals, and reports. Register using the link in the show notes and get 20% off your initial YCharts professional subscription when you start your free YCharts trial through Animal Spirits, new customers only. Welcome to Animal Spirits with Michael and Ben. All right, Michael, through the close on Monday, we're recording this Tuesday morning, right before the open. The U.S. stock market, the S&P 500 was up 17%, and it's in a drawdown of 1%.
Priced in, not priced in gold.
Well, priced in gold, it's down. Priced in Bitcoin, it's up. So which one do you follow? Which is your currency? Maybe people overreacted a couple weeks ago. Is that fair to say?
No.
You don't. So we had a little 5% correction. We had that one day we were up 1.5%. They were down 1.5%, and it seemed like the mood of people were. Some people overreacted a little. Listen, I'm not calling anyone out. One of our producers, one of them, slapped me and said, "You know, we have a lot of guys with beard." He said, "Hey, is this the start of the crash?" I do think every time, this is obvious to say, but you can't have like a 40% crash without starting with a 5% correction. Duh. Mm-hmm. But every time we get a 5% correction, I feel like from now on, people are going to think, okay, this is it. This is the crash.
True. Yeah.
I think that overreaction is going to happen every time we have a correction now.
I agree with that part. The part that I don't agree with is, did we overreact? It's easy to say with the benefit of hindsight, but I think the reason why the stocks were falling off was and is warranted, because this is like Atlas with the world, the globe on his shoulders, that statue in New York City. Mm-hmm. That's what this is like. This market is, with the hyperscalers and AI and the spending, and that legitimately came into question. And so I think that we're 3 weeks removed from the episode. But when NVIDIA reports a blowout quarter and has that huge reversal, yeah, people are going to react appropriately. And investors never underreact. They always overreact. So I don't think that it was an overreaction, like, oh, people are being babies and freaking out. It was warranted. We got some news that was disconcerting, and people responded as they always do.
I'm still saying this is a healthy correction, that a lot of the speculative stuff. Because if you say, well, listen,
wait, no, but that could be true too. Because I was saying it's a healthy correction, but that doesn't mean that like investors were dumb to sell NVIDIA and Meta and whatever.
So it's a healthy overreaction.
Yeah.
Okay. This is kind of interesting. If you look at just plain vanilla, because I feel like in the past few years, people have wanted to put a stake in the heart of like plain vanilla is dead. You need more. Plain vanilla can't work anymore.
The 60/40 died in 2022.
Yeah. Remember I wrote the eulogy. Plain vanilla, this is doing fantastic this year. So the EFA is just developed international stocks, is up almost 30%. I mentioned the US stock market is up around 17%. The ag, bonds, total bond market is up 7% this year. So if you just had this boring 3-fund Vanguard portfolio of US international bonds, you're having a fantastic year this year.
Boring worked.
It's kind of surprising, right? Especially, I think the bond piece, how many people do you think know that bonds are up almost 10% this year? Like the aggregate bond market. Probably not many people, correct?
No. Yeah.
It's a good year for plain vanilla.
Yeah.
Most years are. Right?
Most times stocks go up, as Samro likes to say.
That's true. Speaking of Samro, he does this every year, and I love it because he does this. He takes all of Wall Street strategists' price targets, and he shows them because they start coming on now. He keeps track of them by the firm, and then he updates them throughout the year, and he shows what happened at the end of the year. And so, as of right now, we're looking at like 7,100 to 8,000 for next year. I'm actually kind of surprised because they're all gains so far. I'm sure there's got to be a bearish person coming out somewhere. So the gain,
I think Savita's not too bullish.
Okay, so the gain range is 4% to 17%. If I'm a strategist and I want to stand out, because that's the game. You want to be able to get on CNBC and Bloomberg because of your calls. You want the headline to read, hey, strategist who predicted ... That's what you want to happen if you're a strategist. I'm predicting a 10 to 15% down year in 2026. Because you know my stat, the average down year in the S&P is down 13% over the last 100 years. If the stock market is down, the average is down 13.
So you're not predicting that. You're saying that if you were coaching, if you were doing PR for a strategist, that's what you would tell them to say.
If I was PR, I'd say, hey, listen, no one is doing this yet. You be the first one to say, hey, the market's going to finish down 15% in 2026. If it happens, you look like a genius. If it doesn't happen, no one remembers it because everyone else picked the gains.
Yeah, well, the thing is, if you're bearish and wrong, nobody cares. Well,
there's a lot of wrong bearish people.
That's not true. But it's not as if one strategist is going to make a client do anything, right?
No.
They don't only listen to one strategist.
Exactly. So, yeah. Because
now, if you're bearish and wrong and you're managing money, you're fired.
Because all of these firms have strategists that have views, but then they also have asset management firms that have their own views, and their portfolios don't always match the views of their strategists. I'm just saying, if you want to get on TV, that's what you predict right now. And by the end of the year, everyone's going to forget it anyway if you're wrong. Okay, I have a take here. So Jeff Gundlach was on Odd Lots, and he says almost all financial assets are now overvalued. And my take is that this is impossible to happen. All financial assets cannot be all overvalued because money has to go somewhere, especially in today's day and age. Everything can't be overvalued. Okay? I pulled this one because I wrote about this in 2015, way back when.
That was when the everything bubble was happening?
So Robert Shiller said, unlike 1929, and this was on Zero Hedge, this time everything, stocks, bonds, and housing is overvalued. I just don't think that is possible because people have to allocate capital somewhere. I mean, you could say, well, they could just put it in cash, but I don't think it's possible for every financial asset to be overvalued simultaneously. Thoughts?
I mostly agree. I guess maybe the pushback, if I were to give pushback, not that I am, but if I were to be the mouthpiece for Jeff Gundlach, not that he needs me as a mouthpiece, there's been so much. The bazooka was fired during COVID, and so much money made its way into the system, into people's bank accounts, filtered into the stock market, into private assets, into crypto assets. So I think that you can have that dynamic where, and this is part of the broader conversation that was taking place this week about, and it's not just this week. I mean, it did. There was a piece that went viral this week, but just the overall sentiment of something is not right. And I am definitely sympathetic to that view because you're seeing it in elections. Like something, it's not just feelings, it's not just vibes. But I think maybe the diagnosis of it, of where the bad vibes are coming from, where it's like, it's so expensive to live. True. I don't think anybody would dispute that it is more expensive to live than it ever has been. But I think maybe the root of the problem is there are too many people with too much money. Bringing back to the point that you can have this type of thing where most asset classes are overvalued, even if it doesn't mean that all of a sudden they're going to all burst simultaneously.
So there was this post, I think.
But what do you think about that take? That the real problem is
there's too many rich people.
Of course, the have-nots, that's a perpetual issue. But what's causing the consternation is there's too many people with too much money.
So there was a post on LinkedIn a couple weeks ago from the Topps, Topps, the trading cards, from the CEO of Topps, which I used to be, I used to dabble in cards a little bit back in the day. I feel like everyone got into it, 5 years after the Fleer 1986 Michael Jordan. So everyone had one friend who had the Michael Jordan rookie card, and then everyone in the 90s started buying cards, and all those cards in the 90s are worthless because we all bought them. Anyway, so he said, listen, the card market is crazy out of whack because there's so many rich people coming in and buying stuff up. And everything is, he was kind of saying that like everything is overvalued, and he talked about the K-shaped economy and all this other stuff. And I do think that that's a thing where everyone has a lot of money because money market assets, bonds, all this stuff. Like we keep asking, where's all the money coming from? The money just keeps flowing in. The stock market and people borrowing against their assets. I was listening yesterday. Patrick O'Shaughnessy did a podcast on business breakdowns with the founder of, what's the watch company called? Hodinkee, I believe. And they were talking about, and it was a Rolex episode. And you used to be able to get a Submariner for $5,000, whatever it was. The entry price for a starter Rolex is now twice that.
And at the upper end, you can go to a watch store. You can try to get a Rolex or these fancy brands, and literally try and slap down $100,000 for a watch and be told no.
I
There's
have to admit this, as a finance guy, I'm gonna lose my finance bro card here. I don't get the Rolex thing, and I never have. Like, I don't even think they're attractive watches. Is that a contrarian take? Like, I see a Rolex, I don't think like, man, that's a beautiful watch. I don't.
Yeah, and that is a contrarian take.
Okay,
but the point
for me.
The point is, like, there's so many different. You mentioned cards, I mentioned watches. Look at the stock market. There's so many different areas to point to. Look at real estate prices, where it's like, this just doesn't feel great.
I don't think that feeling is going away, though, because I think this is also a social media dynamic. I don't think that all of a sudden this is going to be solved, and one day everyone's going to wake up and go, "Yay, everything's great again." I think this is going to be a perpetual feeling that is probably just going to slowly but surely get worse, because this is how we live now. It's like one of the trappings of wealth. Everyone is wealthier, but when you see other people wealthier, it's really hard. Because I think one of the things that's happened is, on social media especially, a lot of rich people are telling middle-class people that they're actually poor people. And who's going to argue with you when you say, yeah, I'm middle-class? I should be, because by definition, everyone can't be above average. By definition, you can't be above average. There's always got to be a median, and it would be great if everything was better for everyone.
And the average just keeps getting pulled higher. And so does the median, for that matter.
Yes.
And you're right.
If you do fall below there, then it's very painful, and you see this person's doing fine. Why am I not doing fine? It's a hard...
absent a complete wipeout, which obviously hurts the lower part of the the worst.
I mean, if you read a lot of the books about the Great Depression, they had the wipeout, but there were still a lot of rich people who did just fine, and they kept living with their servants, and they're like, that's the thing is,
this is the new normal.
It is. Unfortunately, for a lot of people, I think it is. It's not. Although, so the zeitgeisty stuff is not going to get better.
Did you see? Oh my God, my brain. Cinderella Man. Remember that scene where Paul Giamatti, where Russell Crowe goes into his apartment and he sees that he's living broke?
That's a really good movie, actually. That's kind of an underrated Russell Crowe one.
Very good movie. Saw that in the theater. All right, where we go? Okay.
Can I just say, every movie you say you saw in the theater, I'm going to call bullshit on half of them.
Call my dad. We saw Cinderella Man in the theater.
All right.
Positive.
No, but I guess it is true. Back in the day, like, when there was nothing else to do, there was no stream. Like, we would literally just go to the movie theater every weekend.
So also, my parents got divorced when I was 6, and every Saturday I went to my dad's, and we either went to Blockbuster, or most of the times we went to the theater.
Yeah,
that's what we did.
All right, that's fair.
All right, this is a chart. In April, so let's start with this. Actually, let's start with Yardeni. So, U.S. net capital inflows. Foreign private purchases of U.S. equities totaled a record $646 billion over the past 12 months. Look at that chart.
So that whole sell of the U.S. thing lasted about a month.
So
here's the thing that I'd like to see, though. Like, what does foreign purchases of foreign assets look like? Because if you showed me this data before the year, I wouldn't say, man, foreign stocks are probably crushing U.S. stocks this year, or doubling up their return.
I would guess not as much, but I don't know. It's just a guess. All right, but here's the coup de grace. Net foreign purchases of U.S. assets. This is from Apollo, and it breaks it down by month. So look at April 25. There was a massive outflow. Like, that was a thing, and the narrative was, U.S. exceptionalism, question mark. And that narrative died because immediately, as soon as they sold them, they came back in record numbers in May, and it's been positive inflows for the rest of the year.
One of the things that we asked in April or May or whenever was, what's going to matter more, tariffs or AI? And obviously, I think we have our answer.
Yeah. What a year.
Okay.
April was scary as shit. People like
it was. We had the president of the United States saying, like, listen, I don't want to make a depression, but, like, what if we put this stuff through it and we're willing to
Remember the talking points from Besant and Lutnick, where it's Main Street's chance.
Yeah, everyone's got
their turn.
Yeah, rich people have to take their pain, and if we have to go to recession, who cares? There are people who are like legitimate people saying we have to go into recession to do this. So be it. Anyway, moving on. All right. I've never seen this before. Eric Balchunas, believe it or not, 54% of Americans own a mutual fund, while only 15% own an ETF. Wider than gap, people think. So obviously, the big part of this is I guess, just baby boomers who have most of their money in mutual funds and didn't want to sell them, or 401ks. Like the
Yeah,
fact that
401ks.
so 401ks is the thing. I can't believe that there hasn't been a bigger push to get ETFs in 401ks. Does that not seem like we're gonna look back in 20 years and go, why did that take so long? What was the holdup?
I don't know the mechanics of cash settlement and all that sort of stuff.
Yeah, I know
I don't
that,
know.
but I mean, the robo advisors figured it out. You've got to imagine that the 401k, yeah, I guess maybe it's a little behind, but that this number surprised me. 15% of households own ETFs. I would have thought higher.
Yeah. Here's a great chart from Mike Zicardi from via Bank of America. Robinhood holds the biggest share of daily active users. This is a hell of a chart. So
For online platforms,
they compare. Well, yeah, they're not measuring physical branches.
well, you know, but so this is what eToro, E-Trade, Schwab, Fidelity, Robinhood. Surprisingly, though, Robinhood peaked in 2021 at the meme stock craze, and the other companies have eaten into the share a decent amount. Obviously, it's still what, 50% of the total?
I mean, yeah, it's wild.
But it was, I guess, 75% at the peak. But yes, Robinhood is like a behemoth in the online space, obviously.
Yeah, I mean, I'm a daily active user.
You know what I did recently?
Probably go on Robinhood to check the market. I mean, when I'm out on my computer, I think I'm a sicko. I think I look at the market 474 times a day.
You know, one of the great
there is never. How about this? I almost never, unless I am recording with you, but even still, I've got the market on my screen. I'd probably never go more than 6 minutes without looking at the prices.
I'm probably a little bit more of a range than you. But here's the thing. So I think people say like Robinhood's or like their technology and the access and how their interface works is one of the reasons that they've done so well. Obviously, the zero commissions was a big thing, but their interface is just better than everyone else's.
It's a great app.
It's kind of like Netflix and the other streamers, right? The other streamers.
He's got a great app.
The other streamers are so much worse than Netflix,
Nothing.
Right? Well, I don't know what that's from.
Heat.
Oh, I gotcha. Okay.
Thank you.
That was your Pacino. But so if you use other streamers and like it doesn't just automatically go to the next episode, like why is this so much worse than Netflix? Netflix's interface is just so much better. But it would be the same thing with like Schwab and Vanguard and Fidelity. Like their online platforms just aren't as good as Robinhood's. I think that's undisputed. Here's the thing though.
Yesterday, I was.
Wait, I have a point here. Real quick. I moved all my money, my stocks and stuff from Robinhood to Schwab recently. And I don't check it nearly as much because Schwab's interface just isn't as nice and easy as Robinhood. And I think that's actually a good thing. I'm not checking it compulsively like you were saying. Like, oh, what is this stock doing? What is this ETF doing? What's the market doing? I'm not checking it as much because it's not as easy. I think that's a good thing.
Oh, yeah. I'm not saying what I do is healthy. It's insane.
So I did it. It's kind of like a relief. Like, I don't have to look all the time.
Yeah.
What am I doing? It's not helping anything.
I do wonder, will there be a point in my life? I'm sure there will be when I don't do this. But it's been like this for 15 years. I don't know. All right, anyway, getting back to the point of the interface. Last night, so we watched The Beast in Me, which we'll talk about later. I was trying to search for, on the Disney app, I was trying to search for The Americans, a show that you love, a show that I've never seen. The main star of The Beast in Me is in The Americans.
That guy is fantastic, isn't he? He's such a good actor.
I don't think he's a very good actor.
You don't like him? Oh my gosh. Wow. We disagree on this totally.
Okay, we'll talk about that later.
I think he's phenomenal.
So I was on the Disney app looking for The Americans. I couldn't find it. I literally typed in and I go on my phone. I said, wait a minute. Isn't The Americans on Hulu? I don't understand. So I opened the Hulu app inside of Disney. And again, I searched for Americans. I searched for The Americans. Nothing. But I open on my phone and it's right there. So then I'm in the Hulu app and I'm scrolling to like the action category. Scroll down. Nope, not there. I scroll. I'm like, is it in the drama category? Finally, it's in the drama category. But why is it so hard? And your point, Netflix is the Robinhood of content.
It's way better.
All right. There's an article in the Wall Street Journal.
Duncan says I have to live a little.
Why? Because you don't check the stock market that much?
Yeah, I guess so.
Meet the teens investing in stocks for their future home and retirement.
This is great. So they give all the stories as usual. Like this person is doing this, and we interviewed this person. I just think all these stories are great. This stuff was not happening when we were young. Not at
All right,
all.
and this is all Robinhood.
Yeah,
And
it
in
is.
2020 and 2021, a lot of people like you and I were wagging our fingers and saying, this is not healthy. The stock market is not a casino. People are learning the wrong lessons. And a lot of that is valid. They're gamifying investing, and a lot of that is valid. But the benefits to people, and we did say this at the time, maybe we changed our tune a little bit later. The benefits of getting people to learn about the market and to discover that there is a right way to do this and long-term compounding and all that sort of good stuff. Like that was all Robinhood. It really
Yeah.
was.
It broke the barriers down. I think the whole zero commission trading and just making it easier to set up an account in minutes, attach your bank account, and then start trading or investing immediately. And the other thing is, I think people are realizing the stock market really is like the greatest wealth building platform on the planet. So there's this in the story, they talk about this teen, I think is in college, and they talk about all these kids who have saved up their money from summer jobs and put it in the stock market, and the parents helped them. And it says that this one girl growing up in Manhattan's Chinatown, Zhang translated her immigrant parents' tax form for them and noticed that her classmates' homes were nicer than hers. She says, I felt an obligation to be financially stable because my parents aren't always that stable. Now a college student studying finance and accounting. And she started saving and investing in the stock market because she wanted to create a better life for herself. I think that's a wonderful story.
Yeah.
Good for these kids. And we hear
And
about it all the time. I hear from young people all the time who are investing in way, way, way younger than I was. And if they keep their money in there, they are going to be so much better off and wealthier than even our generation.
I don't think I told you this. Josh and I are interviewing Vlad on Thursday.
Okay. No, didn't
For
know that.
yeah. So that should be fun.
Okay. Yes,
All right.
I love their. You always pull out from quarter the Robinhood charts and stuff that shows their growth.
They have the best deck in the business.
They do. Yeah, it's very good.
All right. Getting to the point that we were talking about earlier about the discontent and where it's stemming from. Alison Schrager had a really good piece on this. She said, this is an age of discontent. Just note how often we use the word crisis. The affordability crisis, the housing crisis, the everything crisis. And yet we've never had so much, not only in terms of wealth, but also income. It's true the middle class is disappearing, but largely because so many people have become upper middle class and fewer people than ever live in poverty, even by real American poverty standards. She has a chart showing the percentage of US households with a total income greater than $150,000 has increased as the middle class has been shrinking. So more people are getting pulled up. It is important to note this figure includes earned income, tax credits, and transfers. To some extent, it shows how much redistribution we already do. It also shows how much more prosperous America has become over the last 50 years. You can't even compare our standard of living today with how we lived 15 years ago. So why do people feel like the economy isn't working for them? Some of it is higher expectations of what a home should be, where you should be able to live, and how fast your earnings should rise. Some of it is legitimate affordability issues. Healthcare, education, and housing do cost much more, even if they are much higher quality than they used to be. Well, maybe not education, more on that later. If we are richer, our expectations would rise. Last thing, it could also be that while the upper middle class has grown and is better off in many ways, the very rich got much, much richer. And this makes the economy feel more zero-sum to people striving for success, even if overall it has meant a more prosperous economy for more people. I think she nailed it. So the people that would have been discontent 20 years ago are so much angrier, understandably so, because they see so much excess and so much wealth. And it's so visible, and it feels so f***ed up when everything that they're paying for is so expensive.
So I thought about this recently in terms of my own family dynamic over the years and how the expectations rise. So my dad and he had 4 brothers and sisters. They lived in a tiny, tiny house. One of my uncles still lives there. And I can't believe that with 7 people, they lived in this house. And when we were growing up, he would always tell us that they didn't have anything at all. He would say every year at Christmas, he would say, listen, we didn't get Christmas presents every year. We rented them. And he was trying to tell us, we didn't come up. So what you guys have is way more than I ever had. Okay. But I think about something like childcare, which I think is a big thing. I asked my parents recently, what did you guys do for us for childcare? My mom worked night shifts. She worked 7 p.m. to 7 a.m. 3 days a week. And she said in the other days, me and one of the moms down the street, we traded off doing daycare. So half the time I took her kids, half the time she took us, right? And so she said, you sending your kids to daycare, like they're actually learning stuff, they're doing stuff. We just like made do with people in the neighborhood. And I don't think people do that as much anymore. And so when we went to Florida last week and our kids flew, I said, listen, when we went to Florida as a kid, we drove. I laid in the back of a minivan. We drove for 24 hours to get there or something. We stayed off premises. We didn't stay in Disney like we were doing. Like, and I think that stuff, like over time, that's a sign of progress, but also the expectations are rising and rising and rising. And I think that is a form of progress in itself. But unfortunately, when the expectations get higher and the luxuries become necessities, that can make it easier to be discontented.
I told this story a couple of months ago. Over the summer, my dad took me to the apartment that he grew up in, the complex. And my dad grew up in poverty. He was, he shared a bedroom with his grandfather, like a bunk bed with his grandpa, which is wild to think about. And I asked him if he felt poor, and he said no, because they didn't know.
Right.
He didn't know that people lived in houses and that there wasn't the extravagance in the 1950s that there is today, obviously, but that's the point. It wasn't visible. It was much more local.
Everyone was kind of in it together, more or less.
Right.
Yeah. Right. Again, so I think this is a sign of progress, and this is one of the reasons that these feelings aren't going away.
Yeah.
Probably ever.
All right. Good chart. Claire Lehman tweeted, the trends in mathematics, reading, and science performing. This is for the OECD, so it's global. It's not just the United States. People who don't think phones, social media are having a deleterious effect on developing brains. What's the alternative explanation for this? Did every country put lead in the water at the same time? So the test scores for mathematics, reading, and science are collapsing. Now, there is a noticeable break, especially in mathematics, around COVID.
Yeah, COVID's a big thing for this, for sure.
Had a horrendous impact on society, but this was trending lower. And there's been a lot written about this over the past couple of weeks. This trend is alarming. I
don't want to poo-poo this at all. I feel like for decades we've heard how bad our education system is. Why do things keep improving then? If our education system is so bad, how do we keep creating such great stuff? How do we keep creating so much wealth? I'm not trying to poo-poo this. And I also think that like the solution is coming. Every kid is going to have an AI tutor. Like I'm not as worried about this because I think the solution is already here.
I like that take.
Like I agree. This is not good. This is not a good thing. The solution is here. All of our kids are going to have an AI tutor that's going to like understand and know their specific strong points and weak points and help them on the weak points.
Yeah, I agree. All right. Carlisle has two charts that I wanted to highlight. One of them is the household consumption index. I don't know exactly what this measures, but it breaks down into highest income, middle income, lowest income. And the takeaway is the highest income, the middle income and the lowest are up and to the right, but nowhere near as steep as the highest income line. And then they have another chart next to it showing the household financial stress index. And of course, at the highest income, there's no stress, less than 2% delinquency rate. The middle income is steady, under 4%. But the lowest income, although declining, is still way, way, way higher. I think the chart always looks like this, but all right, good news. Good news on the other side of this. The fantastic news, in fact. Michael and Susan Dell announced on Tuesday that they would deposit $250 in individual investment accounts for 25 million children, an amount totaling $6.25 billion. It is one of the largest philanthropic gifts ever to go directly to Americans. These are called Trump accounts.
This is a cool story.
That's great. The federal government will give $1,000 to babies born between January 2025 and December 2028. The Dell's gift extends to children up to 10 years old, though it limits eligibility to those who live in a zip code where the median household income is below $150,000. More of this. I think more of this is coming. I think people will follow his lead.
If you're a really, really super duper rich person, I think I looked, it's like he's worth like 150 billion. What better way to give it than doing something cool like this? I've seen other billionaires that have like paid off everyone's student loan debt or something. Like this is This is a very cool story. I do think that one of the ways that we could help a lot with young people, we talk a lot about the housing market. I do think that the daycare, there should be a way bigger tax credit you get for daycare. If you have a
Oh,
dual income family, or you're like,
yeah.
it's so stupid that
Backbreaking.
we subsidize education K through 12, but not pre-K, when it helps people go to work and be members of the economy and help things grow. Like that should be a way higher number. Like if
Yeah.
they're
So
in this same time
people
frame, they
people
should.
hate this. Why should my taxes go up to subsidize you having babies? We didn't have that. Like this is a electric rail
It's
type
a
of
net
topic.
positive for society because it helps the economy with more people working and producing.
Yes. I unapologetically agree with this take. Like, whatever child costs daycare are just completely unhinged. All right, this is another interesting one from Carlisle. So last week we shared the stat from Matthew Bowes. I can't remember what the stat was, but it was something like what we're seeing has never happened
Oh,
outside
it
of
was
a recession.
recessionary for job losses, right?
All right, this is not a good chart. The local experiences versus travel spending index. Both of them are going down big league. There was another chart showing the experiences spending index, which is travel, tourism, and live events. This turned negative for only the second time over the last 3 years. Not great. I don't know what the story is here. Maybe it's just don't need to overthink it. The economy is slowing.
I think eventually people got exhausted and did too much stuff. Like at a certain point, we've been waiting for this forever. Like we thought, people are going to take 1 or 2 trips after COVID and then it'll be back to normal. And it didn't. This seems like it maybe is back to normal. I tell you what, not at Disney. Holy smokes. People love spending. So I'd never been to I'm not a Disney person. I've mentioned this before.
Stop saying that. You're a Disney person.
I am. We've gone 3 times, so I'd never been to Disney Springs before. Have you ever been there before?
No. Oh, is that like the shopping spot?
It's shops and restaurants.
Okay.
So
Yeah,
for
yeah.
Thanksgiving dinner, we went there. Which, side note, the last 2 years we've been traveling Thanksgiving week. We thought it was, the kids have time off of school anyway, so I've missed Thanksgiving, the traditional Thanksgiving day. I didn't miss it at all. 2 years in a row, not at all.
Yeah.
I don't, anyway. But we go to Disney Springs and there's just millions of people everywhere, and we're trying to go in stores and it's too much. It's too chaotic, and the kids went and did some like boat. There's a car that you could drive that like a car turns into a boat and you can drive around. So the kids did it with Courtney, and shoot, there's only 4 spots, so I'll just stay back and have a margarita. So I'm talking to the bartender, and I said, "This place is this place more insane than usual because it's a holiday?" And she was like, "It's a little bit more," but she's like, "Honestly, it's always like this. It's always busy." And like that just boggles my mind that there's just always people spending money in an insane amount of money at a place like that. And it really never slows down.
Yeah. Happiest place on earth. Can't wait to go.
I have some more Disney thoughts for you later. Let's talk about AI. So Derek Thompson had a cool post with Tim Lee, who he does a Substack called Understanding AI. So he does a lot. He does some of the best charts on AI, I think. And they did this thing kind of like the pros and cons, right? They did a Grand Rapids Hedge post. Okay, little of this, little of that, little good, little bad. And I thought this one was interesting. He said on the positive side, AI revenue is climbing fast. So they said generative AI revenue has increased 9-fold in the last 2 years, from 7 billion to more than 60 billion. And this isn't counting like circular spending on chips and data centers. Like I'll give to you, you give to me. And they look out what it could be, the estimates. So say if AI revenues continue to grow at 100% per year, AI will hit 650 billion annualized in 2029, which is right on schedule. And it's basically saying all the money they're spending, if that happens, now that's a big if, like all the money, like the ROI would actually be worth it.
I hope so.
That's a big leap, obviously, right?
Yeah.
Okay. We talked a few weeks ago about the construction boom. I said, like, there's got to be construction companies that are going crazy, and people doing, the Wall Street Journal had this one nailed. A few people sent this to us. So they're saying that because of high demand from data centers, people from electricians to project managers are earning 25 to 30% more than they did before this happened. So they said they talked to this guy in Columbus, Ohio, who said he's been doing odd jobs, hanging drywall, trying to find clients. He said he pinches himself every day going to work. He's 51. He now makes more than $100,000 a year. It's a huge increase in pay, and it's all because of data centers. And they said they had all these stories about these people who are in construction workers making more money than they ever thought possible. But this is one of those things, though. Like if you're a realtor in 2020, late 2020, early 2021, it's the best market environment you're ever going to have.
Yes.
Ever, right?
Yes.
Low interest
Yes.
rates, bidding wars, housing selling. Like this is going to be probably the best labor market for these people in these specific industries ever. Like this boom is going to be the biggest one they ever see.
Correct.
They're going to be talking about this forever.
Yeah.
But anyway, that's a good unintended benefit, I suppose.
Absolutely. All right, let's do some crypto stuff. Crypto has been acting horrifically.
What do you think? What do you think Bitcoin could go to? Like,
especially notable considering the strength of the stock market. Are you asking me for a Bitcoin price target?
Mm-hmm. You gave S&P 10,000 a couple. I mean, obviously, a lot of this has to do with the stock market because
I don't know.
Crypto is a risk asset.
This could age terribly. I think the bottom's in.
Okay.
But could it go to 70,000? And then, I mean, yeah, why not?
And obviously, if the stock market falls 20%, Bitcoin is going way lower.
Sure. But here's my Grand Rapids hedge. Did I buy more? No. So do I really believe it that much that I'm putting my money where my mouth is? No.
Oh, okay. See, I'm a money where the mouth is guy. I said I started buying. I've been slowly but surely. Once a week, I'm buying a little more crypto because it crashed.
Yeah.
Because every time it crashes, it comes back.
If it rolls over again, I'll buy. Okay. So investors pulled $6 billion from global crypto funds. November's exodus is so far the worst on record for ETFs. So investors are scared. They're, for whatever reason, I mean, maybe prices are going lower. It's that simple. I don't know, but they're pulling money out of it.
So that's interesting because in April, money went in, right? Yeah. Everyone flooded in to buy the dip. Now the money's flooding out.
Yeah.
I think that's interesting.
The April crash felt worse, maybe because it was in the context of falling stock prices as well. Like for me personally, I said this in April. I almost sold.
Right.
I remember I was on the baseball field and I saw a tweet from a guy that I really respect who I think is really bright on this stuff, level-headed. Said that Bitcoin go to 10,000. I said, "Ken? Holy shit." And that was the literal bottom. But I was genuinely tempted to sell a decent amount. So
do you think it still could go to 10 at this point with the ETF powerhouse behind it?
No.
I almost think it's impossible.
No, I just think that there's too many people with too much money that would...
Unless there's a quantum computing hack or something. But it's funny, I saw some conspiracy theory out there saying Bitcoin is crashing because they're worried about quantum computing figuring it out someday. But if you could figure out the code to Bitcoin, what would be the point of it? Because it would all crash. Unless you just wanted to see anarchy, if you could hack Bitcoin and it wasn't secure network anymore, so what? It's all going to zero.
Well, then why? Right. If you're why wouldn't you hack the Federal Reserve or the Treasury
or steal the U.S. Constitution?
Right.
Declaration of Independence. I mean, yeah.
All right. So, in OOL news, here's a press release from Strategy. Establishment of USD reserve. Strategy today announced that it has established a USD reserve of $1.44 billion to support the payment of dividends on its preferred stock and interest on its outstanding indebtedness. The USD reserve was funded using proceeds from the sale of shares of Class A common stock under Strategy's at-the-market offering program. Strategy's current intention is to maintain a USD reserve in an amount sufficient to fund at least 12 months of its dividends, and Strategy intends to strengthen the USD reserve over time. All right, so...
so back into fiat, I see. Interesting.
So they sold shares and they raised cash, aka a USD reserve.
Is this a massive red flag to you, or is this just oh no, they're being prudent? Because I feel like you've been more with Strategy. You followed this story pretty intently.
Both, yeah. If this is not the local bottom or a local bottom for Strategy, which I do believe it is, I think the next 20% is higher, then holy cow, this company is in so much trouble. Now, there are people that know about where the puking point is for his Bitcoin holdings. I don't know all the mechanics of how it works.
I saw this morning someone said the average price is 75 for them. All right, but I don't know when that means they have to sell.
It's much lower. So, anyway.
But it would... to me, it'd have to. Bitcoin can't obviously the premium has compressed so much. It would just have to be Bitcoin would have to keep crashing. Because if you look at the chart of this thing, holy smokes, did it get rocked? I mean,
it got rocked. So relative to Bitcoin too. So that's why I think there is a floor under Strategy because smart people would just be all right, well now it's trading at a 20% discount to its Bitcoin holdings. Like, I'm buying because if there's a Bitcoin balance, the leverage is here.
Yeah, it'd just be, but if Bitcoin falls 20% more from here, look out below, right?
Yeah.
I think you're right. If Bitcoin stabilizes, that this thing, I don't know how much it will
It
crash.
depends on the MNAV. It's called the MNAV of where strategy is relative to its underlying holdings. And there is a floor at where the discount could go to. Like, I don't think it could collapse to like, a 20% discount, for example, because people come in and buy.
But the real where this snowballs is people start worrying like, okay, he's not gonna be able to fund any more purchases anymore because people aren't gonna buy the convertible notes. Like that is
Right.
when.
But counterpoint, he just did yesterday. They sold $1.4 billion worth of stock.
I just think this is one of the stories where when Bitcoin is going up, he looks and sounds like a genius. Like, oh God, this guy has it figured out. When it's going down, he sounds like a lunatic.
Yeah.
And it's obviously it's not either of those things. Those are the extremes, but that's how this, and it's kind of like crypto in general, but this company especially is like that.
Yeah.
All right. So there's some new studies that came out. Let's talk housing. In a study from the University of Chicago Northwestern, they found that Americans demonstrate reduced work effort, increased leisure spending, and investment in risky financial assets among young adults who face little to no realistic prospect of being able to afford a home. So they found out, and I don't know how they did this, but they found that people who are owning a home, or it's more realistic, they take fewer risks and they strive harder at work, which is kind of surprising. The work thing, I don't know how you can actually figure that out. But the risk thing obviously makes sense, and we've talked about this. And I do think, and some people look at this and go, this is a bad thing. And I continue to think this is probably a net positive for most people who are doing this. For a wealth, not for their psychology, not for their psychic income. I think from their bottom line, they're going to be wealthier because of this, because they're willing to take more risks, invest in the stock market. I think that is going to be the outcome of this, even if they're not happier because they would rather own a home than have a stock portfolio.
Yeah, because somebody's like, all right, I would have had $17,000 in my brokerage account, and now I have 34. Whatever it is, like they want to be in the house.
Yes.
So for those that want to be in the house.
Yes. But obviously so they put some numbers behind the stuff that we've been talking about. This obviously makes intuitive sense. This is kind of crazy though. They look at, because the FT is, I guess a lot of people are based in the UK or overseas. They show housing price affordability across the UK and US. They show London, the UK and US. And look at how much more unaffordable it is in London and the UK. Obviously, if you put like New York on here, it would be probably pretty similar to London, maybe not as bad. But this just shows the house price to income ratio. And I just keep thinking in places like England and Australia and a lot of places in Europe, things are way, way worse. And I just wonder if people think it's bad now. Imagine, I can't believe that people aren't like rioting in the streets there. If like the house prices in Australia and London and such, I just think that it could get worse. And it doesn't seem like anyone is willing to do the thing that we need to do, which is build more housing.
Well, as far as the comments about foreign markets, I assume you don't track foreign politics. Like maybe it is bad.
Fair. It's possible. But like the price to income ratios in places like Australia and the UK are 5 times worse than they are in the US. They're so much off the charts worse.
Yeah.
I just think that like, are we on track to become those type of countries, or are we actually going to do something to fix it? I don't see anyone willing to fix the problem yet. There's like a handful of cities that are doing it. That's it.
Yeah.
All right. Did you read this piece from Greg Zuckerman about Charlie Munger? So it's
Did
kind
not.
of the story of Charlie Munger's final years. And it's a really good read, but I wanted to pull out this one piece, and I think this kind of blends in with what we've been talking about with like higher expectations and how different generations. So he says he owned a home with spectacular ocean views in Montecito, California. I guess he designed the entire community. They call it Mungerville. And at one point he told a friend he expected to spend his last years there. I looked the house up. It looked fantastic, beautiful, right? He said instead, Munger chose to remain in his longtime home in Los Angeles. The place didn't even have air conditioning. During a heat wave 3 years ago, friends bought electric fans and bags of ice to cool his library. Munger didn't care. The home was close to people he liked and the project he found stimulating. So this guy is obviously a billionaire. Could have easily afforded air conditioning. Didn't want it. The first person I thought of when I read this is my father. My dad would do this exact same thing. And I feel like this is this attitude, this like, I don't want it, I don't need it, I'll be fine. which we grew up in a house without air conditioning, by the way. My parents just got it finally a few years ago. This is something my father would do. And I feel like this attitude of like, I don't need it. I feel like that is dying with the older generation of the baby boomers.
That's depression babies.
Yes, exactly. So we don't have that anymore. And so starting with Gen X and lower, that whole attitude is completely gone.
Yeah,
yes,
I need it.
That attitude, this is gone. Like, I just thought it was really funny because I just thought for like, oh my gosh, that's my father.
I think that depression mentality is sad. And I understand where it comes from, obviously, right? Like your childhood memories form who you are forever. You can't change who you are. And I'm glad that is dying out. I'm not glad that these people are dying. Don't mishear me, but that is a horrible way to go through life.
I actually, yes, when you see the stories about billionaires who drives a 20-year-old Honda Accord or whatever, I don't think that's a success story.
No.
I think that's someone who like can't get out of or the hey, this person was a janitor who secretly had $8 million and never spent a dime on themselves and lived above a garage.
Right.
I don't think that's a success story. I think that they should have spent the money on themselves and made their life better.
Me too.
Some people would disagree with us. All right. All right. So no one else is going to care about this, but you're going to Disney next month, right? You're taking the kids on Christmas?
I am.
How long are you going for?
We're going to Universal and Disney. I think I'm going for 5 days, something like that. 6 days.
You're hitting all the Disney parks.
I don't think we're doing Animal Kingdom because we did it the last time.
That's one we didn't do this time. All right, so I'm going to give you the rides that you should buy the Lightning Lane Premier Pass for, okay?
Okay.
This is Ben's ride. We did this at the end on Thanksgiving dinner. We were out doing all the parks. We all went through and named our favorite rides. So Guardians of the Galaxy at Epcot is a must. That's one of the best roller coasters I've ever been on. I couldn't believe how great it was. Like, it was fantastic. So much fun.
I think we did that last time. That was good.
There's an Aerosmith roller coaster in Hollywood Studios that I didn't know about. It's called like Rock and Roller Coaster. It's the only roller coaster that goes upside down. It's fantastic. Tron, of course, is very cool. Do you see the picture I put in here of me doing Tron?
That's amazing. So Tron was closed last time we went.
Okay. It's very fun. It's as advertised. My kid said it was a little too short, but it's like that thing, like it looks like it's fake what I'm doing. That's the actual roller coaster. Riding on like a motorcycle. Tower of Terror was great. My daughter Kate, my youngest, was holding on to my arm for dear life. And a few other ones that you know, but the Star Wars rides are overrated.
Stop. Just stop. Next topic.
Really? You don't think this? I think the Star Wars rides.
The Rise of the Resistance is overrated. What is wrong with you?
They could have made a very cool Star Wars roller coaster, and they chose to make some to make you feel like you're in the movie. And
yeah, imagine being a kid.
Yeah, but it's the new Star Wars movies like that no one likes. It's not the old ones.
Get out of here. Get right out of town.
And finally, you like horror movies. It's a Small World, after all, could be a horror movie. They could make a movie about It's a Small World. That is the creepiest ride. I was telling my kids, like, just be aware. This is the creepiest ride you're going to go on. Anyway, okay. That's all I got.
All right. I have some Disney stuff later, actually, as it turns out.
Okay.
All right. So let's talk streaming stuff.
Oh, wait, hang on. One more thing. We did, they have the live Indiana Jones thing, right? The Indiana Jones show. It's one of my favorites because that's my favorite action movie of all time. And my son George has watched all the Indiana Jones movies multiple times. He loves them. He goes, I don't think that's a real Indiana Jones, And I said, the original movie came out in 1981. Harrison Ford is like 85 years old now. It's kind of hard to believe that. I know they're still making the bad movies and recreating them, but it's been out for a long, long time. And I also said that's the greatest action movie jingle ever. Dun, 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 right?
Yeah, it's just absolute goosebumps.
Yeah. Okay.
All right. So Michael Sembelis did a post that we spoke about last week with his favorite movies on the state of streaming. There's so Warner Brothers is for sale. Talks are heating up that Netflix might buy them in a mostly cash offer. Paramount is obviously in the picture.
Did you listen to the James Cameron one with Matt Bellany?
I did.
Okay, and he said he absolutely does not want Netflix buying Warner Brothers, which I thought was interesting because he's worried that they won't show all their movies in the theater.
Right. So they'll show the Batmans of the world, but like Sinners, for example, no way.
That would go straight to HBO or wherever. Yeah. Or Netflix now.
So anyway, that interesting to see where that lands.
And
All right, but in
Netflix
this
hasn't ever really done a big acquisition like this.
certainly not a giant studio. I mean, I don't want Netflix to buy them.
I think we have to just relent and just it's going to be Apple and Amazon and Netflix in the future. They're going to own
No,
all.
Paramount.
Yeah, I guess Paramount. Yeah. All right.
By the way, Paramount, Michael Eisner did Indiana Jones. More on that in a second. So YouTube Premium has 125 million subscribers paying $14 a month.
What do you get for that? Just no ads?
I wanted to watch. So my favorite Patrick O'Shaughnessy interviews are with Rue. I don't know what she's doing down there. I hear noises. My favorite Patrick interviews are with the Hollywood guys. So I love listening to Mike Ovitz from CAA.
Yeah, he's good.
I love
Great stories.
listening. I love listening to Ari Emanuel and Barry Diller, like all these guys that made Hollywood. So I wanted to watch the Ari Emanuel one, and I popped it up on YouTube, and there's commercials in there. So for YouTube Premium, which is not YouTube TV,
Right.
YouTube Premium gives you, I guess, ad-free viewing. I think I'm sure there's more to it. I haven't really done a deep dive, but they've got 125 million subscribers paying $14 a month. That's $21 billion a year. To say nothing of YouTube TV, which I'm sure I could just.
It is kind
Google.
of funny that people tried to say Google's done. Like, how stupid was that? That people were actually throwing dirt on the grave of Google.
So Barry Diller said to Patrick, now Barry basically invented the movies, not exactly, but he was a hugely influential media guy. He said, quote, Hollywood is irrelevant.
Okay, meaning
it's
because
YouTube,
of YouTube. Oh,
it's
okay.
YouTube, it's Netflix, it's Amazon, it's Apple. Like Paramount and Warner Brothers, and who gives a shit? Obviously they're a fraction.
Right, the old school Hollywood being so important is not anymore.
So check out this chart. Streaming earnings. Netflix net income since 2019 versus the major studio direct-to-consumer losses. Disney, NBC, Universal, Warner Brothers, Discovery, and Paramount. Obviously, Netflix disrupted them. They were so late, and then they overspent. Remember Disney Plus, how much the money they spent out of the gate trying to catch up, and didn't work, obviously. So this is wild. The share of US TV viewing time, the pie is not growing. Nobody's watching TV more than they used to. And increasingly, legacy broadcast cable, it's an ice cube. It was 58% in January 2023. 57.5% down to 42%. That is it is melting fast.
Where do you think YouTube TV falls in this?
It is in all other streaming.
Okay.
Because YouTube is bigger than Netflix. Wild stuff.
Makes sense. All right.
Then the next chart shows streaming US video revenue. Streaming versus traditional TV, box office, home entertainment. And streaming is just going to continue to eat into the pie, which is why so many people are worried about Netflix buying Warner Brothers. Like the theaters are already under such pressure that if Netflix does what they do and just moves a lot of these would-be theatrical releases to the couch, not great. All right,
so Disney basically has to hold on to ESPN forever. Like if they get rid of ESPN and one of these other big streamers picks them up, then it's over.
Lastly, to put a bow on this, he has this great chart that I've never seen. It shows recovery rates since 2019. And it shows all different categories. US restaurant revenues exceeded 2019. So they're all the way back.
Do you remember when people were saying that restaurants are dead forever? Yeah. That was actually a thing.
Hotel average daily rates all the way back. North American airline passengers all the way back. Okay, what's not back? New York City mass transit recovery. Film industry box office receipts, only 75% recovered. Film industry tickets sold, only 60% of 2019 levels.
I'll get to my recommendations. We went to the movie last weekend.
Zootopia?
Wicked,
okay. All right, somebody told us that air fryers are what, Ben?
Okay, a bunch of people have said this. Air fryers are small convection ovens, and yes, you can have a large oven that has convection mode. Convection ovens have a heater which is feeding a fan that blows the hot air into the oven space. The fast moving of the air speeds up the speed of the preheating and shortens cooking time. I think people were saying one of the reasons it speeds up so fast is because it's smaller. But a few people sent us pictures and said, "Hey, I have an oven and an air fryer oven right below it, like those double ones, you know." So some people had it. Anyway,
So I keep getting emails about my car.
people have very strong opinions about what kind of car you should get.
So get this. I was dropping Kobe off to school last week, and he's never said anything about a car. He pointed out a car and says, "Daddy, I really like that car. You should get that." A big white Range Rover. I swear to God.
Okay.
We were driving on the highway the other day. We were going to IKEA, which, by the way, when did IKEA become expensive?
Oh, really? The Schnugenflorgens are expensive now?
So I got Kobe a desk. The desk, we didn't spend a lot of money on. It was maybe $90. But the desk chairs are all like $200-$300. I'm like, what is... So Kobe's become a value shopper. I took him to the mall the other day, and he said his budget is $35, which is very cute. So the chairs are $200, $300, and he said, "Why is this place so expensive?" So we ordered a chair on Amazon. But anyway, on the highway, a GX passed us, and I said, "That's the car that I'm going to get." And Robin, Kobe, and Logan looked out the window, and they all at the same time said either "ew" or "I don't like that. It's ugly."
Okay. Uh-oh.
I'm standing my ground.
Okay. I guess I haven't seen the new ones. So it's kind of boxier now.
It's very boxy. I don't know that I love the look either, honestly, but I don't want to be. I just want a car that works.
It does look kind of like futuristic. It's not. I kind of like the boxy look too. It's not terrible.
So my struggles with TVs continues.
Okay.
Two things I'm bad at: buying cars and buying TVs. So the people who we bought the house from, they left their TVs, which was very nice. But the TV in the basement is an older TV, and so it only has like one HDMI cord.
Wait, does that mean you got rid of your TV with a line on it?
I left it. Yeah, finally.
Okay.
I left it.
Oh, the people in your house in your old house must have thought, "Oh, great, thanks to the TV with a line."
No,
on
I'm sorry. I'm sorry. No, I threw it out. Like it,
Okay.
So I was trying to hang my TV from my office there, but the TV was too thin. It didn't fit on the wall, and I'm trying to put it on the rack, and I crushed the TV.
Ooh.
I'm like, "Ugh, what? All right, it's annoying, whatever." So I go to Best Buy, get a TV, and I'm swapping out their TVs with my TVs from my house. Have some guys come and hang the TVs. There's 3 TVs. I'm hanging 3 TVs. Plug in the TV downstairs, blinking red light 6 times. I ChatGPT it, what's going on? It's a manufactured defect. I'm like, oh, come on. Go back to Best Buy. Swapped it out. Just annoying. Annoying.
That is annoying. Okay, speaking of breaking stuff. So Mark Andreessen did this thing on a podcast recently, and they wrote about it. Alex Danko wrote about this, and he says, if you live in the United States today and you accidentally knock a hole in your wall, it's probably cheaper to buy a flat screen TV and stick it in front of the hole compared to hiring a handyman to fix your drywall. And I think we're realizing, like, getting stuff fixed it's hard to do. It's expensive. Like, you have to pay a certain amount just for someone to come into your house, right? So I have the Wi-Fi enabled heater on our phone. Like, it attaches to our phone.
What do you use? The Nest or the Honeywell?
It's like a Sensei Honeywell, yeah. A Sensei, I don't know.
I hate the Honeywell. I swapped the Nest for the Honeywell, and I regret it. I want to go back.
Okay, so you can turn it up and down, obviously. I get a note that our last night in Disney, hey, your heat fell below, because there's a big cold front that came in. It's tons of snow. Your heat fell below 60 degrees, and it's like, I look and it's like 54 degrees in the house. So like, oh, shoot. So my father-in-law the next morning goes to check it out. He says, yeah, your heater's off. It's broken. So as we're flying home, luckily he went early and did this. He called the heating place, came to look at it. Heater's broken. Oh, should we come home to a broken heater?
When you say your heater, like the water boiler or whatever, the boiler?
The actual, yes, heating machine. Yes, not we have no heat in our house. Okay, whatever you want to call it. The fire.
Well, what is it?
He's like, it was unsafe. He's like, he's like some water dripped and there's rust and there was like the flame of the heat was like, it was like a backdraft. He's like, it was a very unsafe situation. So I have to fix this. He says, here's the problem. So he was there for a couple hours trying to figure it out. You need this new mainframe, whatever he's saying. It's going to be expensive. Okay, whatever. We need heat. It's freezing. Here's the problem. It's Friday after Thanksgiving. We're open today, but the part carrier for the carrier air conditioning are not open. We can't get it till Monday. Ugh. He says, what we could do is you could spend $200. I could have someone from Carrier drive there for that $200 fee, and then they could get the piece. And I said, yeah, of course. We need heat. It's freezing. And then he says, I can't get a hold of him. Sorry. We're going to have to go to a hotel or something. And I'm going to go clean up and get everything ready. So Monday I can come in and just put the thing in and it'll be ready. Okay. All right, fine. He called and he says, all right, the Carrier guy just called me.
Did he stay at the hotel?
No. So as he's walking out the door, he comes back in and he says, the Carrier guy just called. This is like 5 p.m, by the way.
Okay.
He's been there all day almost. He says, the Carrier guy just called me. He can come in and meet me. I can go get it. And I'm like, man, listen, I feel bad. It's a holiday weekend. You're working. He said, listen, I don't get paid until this gets fixed. So I'd rather do it now than Monday. So I said, go for it. The guy did it, came and fixed it. But that kind of thing, those people are never going out of business.
No. So wait, you didn't need a new thing. You just needed a piece fixed?
It was a big piece, some mainframe. I don't know. He's telling me the names. Like I know what it means,
yeah.
you know? Like I'm
it's
like
the rotary gooder.
Yeah, do it, man.
Yeah.
Anyway, but you know what everyone always says when this kind of thing happens? The joys of home ownership. People love saying that.
Of course.
All right. Anyway.
All right, let me start.
I'm due for some good luck on my house because I've had bad luck the last few weeks.
What happened with your door?
They're gonna come and refix it, but they're gonna have to give us like all new trades. It's gonna be a mess, but they're coming next week to fix it.
All right, I'm gonna start with some book stuff. So a couple of weeks ago, when Josh and I were going to Austin, I was watching CNBC in the morning, and I saw this guy who I'd never heard of, Tom Freston, do an interview with Andrew Ross Sorkin and talking about his new autobiography. So Tom Freston ran MTV from the beginning. Like he was the guy, and he had a fascinating life.
Oh yeah, I saw that interview too. You're right. That was good.
So good audiobook. And in the audiobook, so he worked directly for Sumner Redstone, who owned Viacom. And Sumner Redstone is a world-class psychopath. Absolute tyrant, maniac. And Tom Freston was telling stories of taking him to Southeast Asia to go to sex shows and all this sort of stuff. So after I finished listening to the book, which was good, I saw like another recommendation, right? Like maybe you should listen to this. So a book called Unscripted by this author, James Stewart. James Stewart wrote Den of Thieves.
Oh yeah. Hey, he's good.
Yeah. So I listened to this.
He used to have a really good investing column. He kind of helped me through the 2008 crisis. He was saying like every 10% lower, I'm buying again. He had like this rules in place. Anyway.
So I listened to Unscripted, and it's the battle for Viacom, and it's Sumner Redstone and these two girlfriends that he lived with that he gave $50 million each to, that were bleeding him dry and keeping him away from the family, and the story about him and Shari Redstone, of course, and looped into it was Les Moonves and Tom Freston.
So they pulled from that for Succession, right? Isn't that the book they used for Succession? Yeah.
It was unbelievable. This guy's life, and the aftermath of all of that. So then that led me to another James Stewart book, Disney War. So Disney War.
How are you listening to these books so fast?
I'm going to tell you. I'm going to get to that because I had a feeling that was coming. So Disney War is about how Michael Eisner and Jeffrey Katzenberg, Barry Diller's involved because Eisner worked for him at Paramount. So the story of how they built out Disney, the movie studio, because they were in the shitter. Like in the 80s, Disney was nowhere. And remember when the Disney store came to the malls? Like it was a huge deal at the time.
Oh yeah.
So Disney was absolutely nowhere. And then they basically reinvented the studio. Little Mermaid, Beauty and the Beast, Lion King, Aladdin. We were there, right? You remember that. Excellent book. Excellent book. So anyhow, the question is, how do I have time to read these books? So I was thinking about this because I knew I was going to have to answer because people are going to ask, what are you doing, you weirdo? Over the weekend, I took the kids to see Zootopia 2. On Friday. So Black Friday, Robin was with her friends. I had to kill the day. I don't know anything about Zootopia. Like my kids aren't fans of the movie. I've never seen it.
Well, my kids really like the first one. I've watched it many times.
So it turns out it's a massive, massive global sensation. Like did $500 million over the weekend.
Yeah.
So I took them to Lincoln Square to the IMAX because I needed to kill the day, right? So my kids are car sleepers. So boom, 2 hours in the car. The next day, IKEA. I'm putting together Kobe's desk. Another hour and a half. I'm running errands all weekend. And I'm listening at, so the book was probably, the unscripted book was probably like 7 or 8 hours. And then a couple morning walks to Starbucks.
It is kind of a nice, that's the nice thing about Audible, right?
So I'm cutting vegetables. I'm putting the groceries away. Like, is it a bit antisocial? Yeah, but my kids are playing. They're out. So
or they're yelling
anyway,
for you and you're ignoring them.
No. But
Dad,
a table pounder for unscripted. You would love this. It's Succession. It's unbelievable. Okay. And there's a lot of things to take away from the book, but envying like these billionaires, whew.
Right. It's not what you think. Right.
Tragic life, Shari Redstone living under the thumb of her maniacal, truly pathological, whatever it is. That guy's a total psycho.
Okay.
All right. Anyway, enough with the audiobooks. Last thing. Zootopia. So excellent movie. Had no expectations. Truly a very quality movie.
Jason Bateman.
In the trailer, Project Hail Mary, I'm in.
I can't. That's one of my favorite books I've read in a long time.
Remember we were like, how are they going to like put that onto the big screen? It looks good.
I don't know how they're going to do the alien. I'm worried about how they're going to make the alien look.
It looked pretty good.
Okay.
Another coming attraction was a Neil Diamond biopic. I'm not a biopic guy. Like, I didn't see the Bruce Springsteen one. I didn't do the Bob.
I'm sick of these. Bob Dylan and Bruce Springsteen.
I didn't see Rocket Man. I watched Queen maybe.
Do we need to have one for all of these guys? No, I'm sorry.
No. Okay, however, so I certainly, in a vacuum, I don't need to see a Neil Diamond movie, but it's Hugh Jackman and Kate Hudson.
I don't know. You know, the best Neil Diamond pop culture moment is Saving Silverman. They have a Neil Diamond tribute band.
All right. Did you binge watch The Beast in Me?
We're 2 episodes away from finishing.
This is the first show that we've binged. I feel like we were like 25 again. Kobe was at a play date over the weekend. Logan was somewhere else. We watched 3 episodes on Sunday. Highly bingeable. It's been a minute. Yeah. I can't remember the last time I binge watched a show. So anyway, I thought Claire Danes was so much stronger than her male counterpart.
So you didn't see? I thought like the scene where they're getting drunk together and the scene where they're at the lunch. I thought that they just played off of each other so well. I think he is amazing. I love that guy.
I thought there were parts where he was strong and parts where it literally sounded like he was reading.
Okay. I think he's fantastic. So we'll have to agree to disagree there. I enjoy it.
Good show.
Anything else from you?
No, I am contented out the ass the past couple of weeks.
Okay. I got a little bit too. So I finished Slow Horses, the new season. It was season 5. And I would say the first 3 seasons were like a 9 for me. Like I thought just knocked it out of the park. This is the best show no one talks about. I say this every year I watch it.
Yeah.
Gary Oldman is so good in this show. And I think the last 2 seasons are more like 8s out of 10, right? Still good, not as good as the first 3, but somehow the last episode, they always tie it in so good. And it's always a twist you never saw coming. And the ending is always great. And they always leave you wanting more. It's such a high quality show. And it's only 6 episode seasons. It's so good. I watched The Roses on my way down on my iPad. So did you ever hear of The War of the Roses from the 80s? It's Michael Douglas and Kathleen Turner. Mm-mm. It's a couple who's getting divorced, who love each other and fall passionately in love, and then they grow to hate each other. And they sabotage each other's lives. And this is an updated version of that. And it's Benedict Cumberbatch and Olivia Colman. And Andy Samberg and Kate McKinnon play their friend couple, who's kind of funny and humor. And it felt like a 80s or 90s movie. It's like not good, but a total great airplane movie. Benedict Cumberbatch is actually really funny in a comedy. I thought he was very good. So it's on Hulu. So it's a good background movie. Like not something you have to pay attention to that much. Wicked. So I took my kids love Wicked. They loved the first one. They listened to all the music. My wife and my mother-in-law love it. So they went and took the kids to see the actual live show of it. So they love Wicked. So they were so excited for it, went to see it. And afterwards they're talking about how much they loved it and how great it was. And
you hated it.
I had to be the turd on the punch bowl, and I just put my hand up and I said, I just have a little slight comment to make. And they're like, and my wife knows probably what I'm going to say, and she's getting mad at me already. And I said, it's creative, I get it, but they're trying to change the story of one of the most magical movies ever made. And I don't like that. they tried to change Wizard of Oz to make it a story that it wasn't.
Mm.
Okay? And I thought that they took a lot of liberties there. So I didn't like the fact that they tried to change Wizard of Oz. That's my problem. And obviously the show's been out forever, so I should have known this, but I didn't know what the story was. And I don't like that they tried to change Wizard of Oz. I think that's sacred material.
Yeah, I agree.
Don't. Anyway. But my kids loved the movie. And it was way too long for me.
Wait, when's the last time you've been to the theaters?
It's the first time in a while, I suppose. But yeah, they're psyched for Zootopia 2. It was great. Not bad. $10 matinee tickets. Not terrible.
Oh, last thing. So this goes to the earlier point of Netflix depriving me, the moviegoer, of a great cinematic experience. You know, there's a new Knives Out coming next week.
Can't wait. I rewatched the first one this weekend because I'm excited for it.
First one was a 10. The second one,
Yeah, the second one was okay, but
that should be a big screen release.
I thought they're gonna release it on for a week maybe. So you might get it in New York if you want. I think they're gonna release it for a week.
I texted Robin yesterday. Hey, Friday, December 12th, 7 p.m. I'm going to see The Shining at the IMAX. It's a re-release. That I did not see in the theater. 100%.
Okay.
I'm writing it wrong, Ben.
All right.
That'll be my Friday night solo.
All right. Are we going to get your predictions before the end of the year? Are you doing Michael's 10 predictions again? Is that coming?
I don't even remember what my predictions were.
Someone on Twitter said to me, "Hey, you predicted that strategy was going to crash like this," and I said, "There's no way I predicted that. It was probably a Michael prediction."
Did I? I don't remember.
It's possible you did. So I think we're going to need your 10 predictions coming up soon. You do that. That's
you know what I have to do? I have to start working on it now because I don't want to cram at the end of it. It's too much work.
All right. Thank you to the production team, as always, Duncan and crew. Appreciate it. Thanks to all the wonderful emails we always get from people. What's our email address? animalspirits@thecompoundnews.com. And we'll see you next time.